How do you actually pay for a home remodel in Utah? Here's a breakdown of your options and what tends to work best depending on your situation. The first and best way is cash. If you have the ability to pay as the project moves forward without tying yourself to a loan or a lender, this is always the best option. No interest, no approval process, no restrictions on draws or deposits. You write the check when the milestones are hit and the project moves forward cleanly. Most of the smoothest projects I run are with clients who are paying cash. There are no financing contingencies, no lender requirements getting in the way of our process, and no delays waiting for draw approvals. If cash is available to you, then use it. The next best option for most Utah homeowners is a home equity line of credit or a home equity loan. Both allow you to borrow against the equity that you've already built into your home. In Utah, where home values have climbed significantly over the past several years, a lot of homeowners have more equity available than they realize. A HELOC works like a revolving line of credit. You draw what you need when you need it and only pay interest on what you've used. This makes it a good fit for phased projects or projects where the full scope isn't clearly defined up front. Current HELOC rates in Utah are running roughly between 8 and 12% depending on your credit and the lender used. Utah credit unions, America First, Mountain America, Utah First, Granite, tend to offer competitive rates and are worth checking before going to a bigger bank. A home equity loan gives you a lump sum at a fixed rate with predictable monthly payments. That's a better fit when the scope is clearly defined and you know exactly what the project is going to cost. Either way, you're borrowing against your home, so make sure that the payment is manageable before moving forward. If you don't have significant equity, or if it's a smaller project, a personal loan is worth considering. Personal loans are unsecured, which means you're not putting your home up for collateral. The trade-off is that the rates are typically higher, sometimes between 12 and 18%, or more depending on your credit profile. For smaller projects in the $10,000 to $30,000 range, a personal loan can fund quickly without the paperwork and the approval timeline of a home equity product. There are renovation loan programs out there, FHA 203K, Fannie Mae Homestyle, and others, that wrap renovation costs into the mortgage. These can work well in specific situations, particularly if you're buying a home that needs work and you want to finance the purchase and renovation together. But I'll be honest about my experience with these programs as a contractor. They come with a lot of administrative overhead, draw schedules, inspections, HUD consultants. The process adds complexity and timeline to what would otherwise be a straightforward project. There are also restrictions on deposits and draw schedules that can conflict with how we run our process. If you already own a home or have equity built up, a HELOC or a home equity loan is almost always a simpler and faster path than a renovation loan program. A cash-out refinance was a very popular option from 2020 to 2022 when mortgage rates were in the 2 to 3% range. In 2026, with rates significantly higher, it's a much less attractive option for homeowners. Replacing a low mortgage rate for a higher one just to access cash for a remodel is a trade-off that rarely makes financial sense right now. I've never seen financing fall through mid-project, but I have seen it fall through during pre-construction. Funds that a homeowner thought were available turned out not to be, or a lender's requirements conflicted with our process to the point where we had to step back from the project. The lesson is to have your financing completely sorted before the planning process begins, not during it, and certainly not after we already begin the project. In conclusion, cash first, HELOC or home equity loan second, personal loan for smaller projects, renovation loans for very specific situations only. Whatever path you choose, have it locked in before you start talking to contractors about scope and timeline. If you're planning a remodel in Cache Valley and you want to have a conversation about budget and scope, go ahead and reach out.